To discuss the sector, I'm joined by Karl Brauer, executive analyst, iSeeCars.com. Karl, thank you so much for joining us this morning. All right, so let's talk about the growth that Xpeng has had. They've managed to grow volume in a tough EV market. I would say it's tough because of just how competitive it is there. But you could speak to that more. From your perspective, what did they do right in this most recent quarter?
They seem to just keep launching really advanced technology and really high value vehicles. It's a magic combination, I think, in this market for EV customers, but also in this time frame. There's a lot of explosive growth in AI and in the kind of features that can power in the vehicle, whether it's driver assist or whether it's the internal interfaces, the digital real estate and what's that capable of inside the vehicle. And the fact that they're doing that on vehicles that are also priced so competitively, it seems kind of like BYD Part 2 here. They're just, as you use the right word, explosive growth here. They're just really eating up market share. And again, as you mentioned, in a very competitive market, they'd be impressive growth in any circumstance. That they're doing it in actually the most competitive part of the global auto sector right now.
Yeah, I mean, look, when I look at deliveries, that's up more than 200% on a year-over-year basis. That's huge. Is it all about, where do you see the strength in demand? Which models is this about? Is it the Mona MO3? Is it the P7 Plus? Where do you see the most significant demand / market penetration?
Those two are two of the big ones because of the value equation. Again, like what you pay for what you get, and in those categories, those are two excellent models. But I think that's really what reflects their strength, is that they don't have kind of one vehicle they're overly dependent on. They have a spectrum of vehicles, and it's like they're all performing somewhere between really good and extremely well. They're figuring out how to address kind of each market niche with a model that's very effective and competitive.
Okay, and Karl, the stock has had a huge move year to date. It's out the ADR. It's outperforming the S&P 500 year to date. But look, as you know and can attest to, they've been pouring money into tech, product developments, but the balance sheet still bleeding. How much longer can they run that playbook before investors say, okay, that's enough?
Exactly. That's kind of the big question here is they're building this foundation and they're spending money to do it. And at some point, you want to see this thing launch into not just record growth, but record profitability. And that's really the only missing element here. Big air quotes around only. So hopefully we see that at least in the next 4 quarters. And I think investors would like to see that sooner than that. If you have this kind of growth, both in sales and revenue, if you're not able to turn that into profit, then you start to wonder, okay, how's the management here? How's the money management? And what's the long-term plan here? But I think they know that, and I think we're going to see that turnaround probably in the next 2 to 3 quarters.
How much longer do they have pricing power? Because as I understand it, their pricing range would be about $17,000 to just under $40,000. How does that stand up in terms of its competition?
Yeah, I mean, they're right in there. They're right overlapping a lot of the same types of models in China and in a lot of other markets where they're competing. But I think they're consistently a little bit beating them. And again, it's not just what the price is, but what you're getting and how well that's impressing consumers. So that's kind of the big question, Diane, is, okay, can we maintain that kind of pricing and get to profitability, or is this kind of an unsustainable thing? And when it's time to be profitable per model and overall, we have to go back to pricing that's competitive or even a little bit higher than the competition. That's the big question.
And then, Karl, what is so special about the technology when it comes to their vehicles?
I think it's just the level of it for the pricing. You get driver assist capabilities that seem to be pretty much on the cutting edge, but you also get like entertainment and interface capabilities as well. They seem to have recognized that people in this market are very much tech savvy. They're looking not just to have electric drivetrains, but to have a technological statement that they're experiencing in the vehicle on a regular basis. And they seem to have tied into that as well or better than anyone else.
Oh, okay, and then Karl, when you look across the broader EV landscape, especially when you think about, so beyond China, when you think about the U.S., the adoption hasn't been at the level that was expected. And how should investors view the landscape now when you think about both what the demand uncertainty looks like, tariff risk, and beyond? What should investors be paying attention to?
Well, I think if you're a U.S. investor in a pure U.S. EV company like Lucid or Rivian, I think you have to really, question what the outcome is going to be over the next couple of years. The near medium term does not look good, and I do think that we're going to see market share fall from, where it was plateauing around 8% to maybe half of that, with all the drop in incentives plus the drop in regulation that rewards car companies for producing them and punishes them for not producing them. So car companies in the U.S. can make more profit on non-EVs. And at this point, there won't be much reason to make EVs when the regulations that punish them for not making them go away. So I think we're going to see a drop in U.S. EV share. Globally, I think we'll continue to see it grow, but it also might moderate somewhat.
Okay, you make a great point in terms of especially the global picture, because as I understand it, there are also more incentives, for instance, even beyond China and Europe as well. So we hear about wider adoption there. All right, we'll leave our conversation there for today. Thank you, Karl. That's Karl Brauer, Executive Analyst, ICCars.com.